Ladies and gentlemen, good day and welcome to Q4 and FY22 earnings conference call of Greenply Industries Limited, hosted by PhillipCapital PCG Desk. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhiral Shah of PhillipCapital. Thank you, and over to you, sir.
Thank you, Lizanne. Good evening, all. Thank you for joining us on the Greenply Industry Q4 FY22 conference call. We sincerely thank the management to allow us to host the call. In the panel today, we have Mr. Manoj Tulsian, the Joint MD and CEO of the company, Mr. Sanidhya Mittal, the Joint Managing Director, Mr. Nitin Kalani, CFO of the company, and Mr. Gautam Jain, AVP, Strategy and Investor Relations. Before we begin this call, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. A detailed statement in this regard is available in the result presentation that was sent to you earlier. I now invite Mr. Manoj Tulsian to begin the proceeding of the call. Thank you, and over to you, sir.
Thank you, Dhiral. Very warm welcome to everyone present, and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q4 FY2022. To start with, let me share some insights on our financial performance in the current quarter. On a standalone basis, we have achieved a volume growth of around 8% and realization growth of around 7% in quarter 4 FY22 on a YOY basis. As a result, our top line increased by over 15% to rupees 414 crore in quarter 4. We expect to see the volume growth to continue in the next year as well. The inflationary input costs are creating pressure on the margins, although the increase in wood prices are partially compensated by small declines in the chemical prices. The overall situation is still volatile. On a full year basis, we have achieved adjusted core EBITDA margin of 10.3% in the standalone business and a PAT margin of 6.5%. The rising input costs has impacted the gross contributions despite price hikes taken during the year. At the same time, better economies of scale and reduction in interest costs resulted in PAT improvements. We expect margins to improve further, backed by reasonable volume growth and some stabilization in raw material price during the current year. In our Gabon business, on full year basis, we have achieved revenue growth of 24% with EBITDA margins of 11.7%. Considering improving demand scenario in Europe and Southeast Asia market and resolving logistic challenges, we expect further scale of our business operations during the current year. On working capital front, we have improved further to 29 days on standalone basis as on 31st March 2022 as compared to 34 days during the previous year. We are also delighted to have partnered with IPL 22 as an associate partner for Lucknow Super Giants. This will surely help us increase the brand visibility in the northern markets. From a macro perspective, after a prolonged period of falling demand, the demand for both residential and office segment has started showing signs of stability. On trailing basis, strong growth momentum was seen across major cities in residential segment during January to March 22 period. In addition, the China Plus One strategy of many global companies would play a key catalyst for Indian wood panel industry. Also, the government initiatives like promotion of furniture clusters will accelerate the growth further. The company is continuously working towards increasing capacities and building capabilities across all facets of the business to capture the growth opportunities that lie ahead. Now I would like to hand over the call to Sanidhya to update on our expansion projects.
Thank you, Manoj ji, and welcome to everyone on the call. I'm glad to announce that we are on fast track mode in implementing our new project. In our Greenfield plywood manufacturing unit at Kandla, Lucknow, the financial closure for the project is done and the construction is completed. Commercial operations are expected to start very soon. In our new MDF plant in Vadodara, Gujarat, the financial closure for the project is done and civil construction work is under full swing. The dispatches of imported machinery have just started and are broadly on schedule. As there is a steep increase in raw material and logistics costs, we are struggling to avoid cost overruns. we see a small increase in the range of 5 to 7% over the initial project cost. We can provide further concrete numbers once we will reach a more advanced stage. From timeline perspective, we are still on our schedule to start commercial production by end of FY23. In our asset-light model, we have added 2 manufacturing partner units in Bareilly, UP, for manufacturing of plywood and allied products. We are fully utilizing the first unit capacity, and the second project we have started partial production in Q3 FY22 and expect the remaining to start soon. Our another such plant in Hapur, UP should be operational by Q4 FY23. Speaking about the demand scenario in the plywood industry, the organized plywood players are expected to witness higher volume growth going forward due to increase in demand from the real estate and the shift of market away from the unorganized player. With this perspective, I would like to open the floor for Q&A session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Venkat Samala from Tata Asset Management. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, finally now we are seeing some kind of volume growth, right? I mean 8% YOY. So could you help us understand, with strong outlook that you've given in terms of Q4 resi demand was quite strong. So did we perform to the?
Sir, your voice is breaking up.
Just a second.
It's not very clear, Venkat.
Is it better now?
Slightly better. Slightly better.
Hello.
Yes. Go ahead.
Hello.
Yes, Venkat, go ahead.
Mr. Venkat, you may please proceed with your question.
Hello. Am I audible?
Yes,
Yes,
you
sir,
are.
please go ahead.
Okay. Sure. So I just wanted to understand that we've achieved 8% YOY volume growth. Given the strong outlook that we've seen in Q4 and that continuing into Q1, Q2 as well. So do you think we performed to the best of abilities, or we did face some challenges in Q4? And if you would like to give some kind of an outlook for what we should expect in FY23.
No, Venkat, I think in terms of quarter 4, we didn't face much headwinds. Fortunately, most of the things were in place. Of course, as we mentioned, slightly on the raw material side, that volatility continued. But the momentum is good, as I also mentioned in my opening speech. And we feel the same will continue this year, though there can be again some headwinds in terms of the interest costs started moving up. But nevertheless, we are very bullish that the sentiments will remain very positive. And we again look for a volume growth of anything between 10 to 11% for this full year. And maybe an incremental benefit on account of price increase what we have taken in the last year of 3 to 4%. So a 15% plus growth is very much visible for this year also.
Sure, sir. That's very helpful. And just on the raw material side, we do see an impact on the standalone margins QOQ, right? So could you help us understand, I mean, what kind of price hikes have we taken, and is it sufficient enough to offset the pressure that we're seeing on the RM side?
Well, we have been continuously taking price increase, but despite all this, if you really see, there was some pressure on the gross margin, I think by around 120 basis points. We have taken another price increase again in this quarter, which will culminate to anything between 1 to 1.25% on the overall business. And let's see. I think Though every time we expect that the raw material prices stabilize or maybe it will start slightly coming down, but that has not happened, unfortunately, in the last 6 to 8 months.
Right.
So as of now, I would say we are almost covered. But if there are any further price increase, then again we might have to take a call. And whenever that happens, there is always a time lag. So there would be some impact in an increasing price trend of raw material on the margins, but not much, I think, from here on.
Right. So just
And
to
also,
confirm,
if you really see, just to add to that, in quarter 4, we also had a higher spend on the marketing expenditure by almost 1.7%. Our normal expenditure for the full year is close to around 3.5%, but in quarter 4 we spent around 5.2% because to some extent there was an IPL cost and also we did TVC burst. So all of them came in quarter 4 only. So
Right.
that is another thing because of which, if you see, to some extent, there was some pressure on the margin.
Right. And just as you've given some, guidance on the revenue side, anything that you could provide on the margin front, assuming, whatever RM costs are there, they kind of stay on?
See, if I am talking of a 15% growth where, 10 to 11% volume growth, and I certainly feel that we can improve the margin by 100 basis points during the year, if not more. Of course, as I've always been mentioning, we have been investing a lot of money back into the business in terms of enhancing our process capabilities everywhere. And but given the same, despite the same, I think on a margin profile, we have been good only. We invested quite a bit of money on the operational side. We'll continue to do so. And over and above that, they still feel that there is a possibility that we can improve the margin by 100 basis points during the year.
Right. So 100 basis points over FY22 margins, right? Okay. So I'm assuming that the exit margins for FY22, around Q4 should be meaningfully better, right?
No, I'm saying the full year margin of around 10.3%. I'm looking at anything between 11 to 11.3% for the next for this full year.
Okay. Sure, sir. Okay, sir. Thank you. Thanks a lot.
Pleasure.
Thank you. The next question is on the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Yeah. The first question is...
Sorry to interrupt, Mr. Sahai. Your voice is breaking up.
Am I audible now?
Yes, now it's much better. Much better.
Yeah. So first question is related to your outsourcing volume for a quarter has an increase. Is it because of what you had in the initial remarks said about the 2 of your outsource partners? Is it because of that? And is it sustainable over here, way forward?
Well, we have been using our existing capacity almost to the full. The new in-house capacity in Sandila is only going to get operational from next month. We are just going to do some trial run in the next 1 week or so. So, the volume growth which is coming is also because of, to some extent, because of this, outsource model where we have all our tie-ups.
Yeah, so this quarter we had seen a higher contribution. So those contribution will continue, or with the commissioning of your, the plant, this will go back to the previous level?
I think, Praveen, initially, it might slightly dip, and then again it will catch up.
Okay.
Because if we have to do a 10% volume growth, both has to move in tandem.
Right. Okay, fine, sir. And the next question is related to the GMEL, where we had seen the volume down, and it's also the realization were on the higher. So it's because of the higher pricing, the volume has seen down, or the overall, the demand were on the lower side?
No, we have been maintaining this even in the past, that all those things what we could have done on the cost side or operation side has been done. So we are definitely geared up for growth there. But the headwinds are mainly, either sometimes raw material supply, sometimes the domestic logistics, and most of the time, not getting the vessels. Those challenges, not getting the vessels is one challenge which continues still. and to some extent some challenge on the raw material availability. But having said that, I think what we should look at is the full year margin, because there is a lot of play which happens when there is a particular country sale or a particular product mix sale. So I think what we should look at is the full year margin, and that will be a better indicator rather than just looking at quarter four margins.
Yeah, got it, sir. Got it. The last question is, sir, related to your receivable, which has for a year reduced significantly. So would you maintain this level over a year, or with the improvement in the volume and the contribution of outsourcing, it will likely to increase from here?
No, in terms of number of days, I think we have become disciplined. It should not go up. In absolute value, it can go up as the sales grows. Yeah.
So you will maintain over here receivable. Okay.
Yes, that's how it looks like.
Yeah. Thank you, sir. Thank you for taking my question, and all the best.
Pleasure.
Thank you. The next question is from the line of Shrenik from LIC Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is, could you please throw light on the distribution strategy for MDF? Like, is it completely overlapping with the current channel, or have we started working on the distribution for MDF already?
I think I'll answer this question. So I think 10% of the trade is common, and 90% will be new distribution network which we are going to build. And we have already finalized our sales head. He will be joining us in the next 2 months, and then we'll start building the sales infrastructure, and we will start building the network and start working on the network. And as of today, the demand is very, very high, and in western region there is no other manufacturer. So without affecting our margins, we feel that we will easily be able to penetrate material in the west. And yes, in the other regions we will also be selling some quantity where we'll have to work much harder than the amount we're working in the west.
And so what will be our differentiation versus the other green brand for MDF?
Differentiation in terms of?
What will be our proposition to the distributor dealer to keep our product?
What will be our population? Product differentiation.
I don't think there is honestly much product differentiation. I mean, all the MDF in the market is the kind of the same. But obviously, at some point, there will be a brand which will play. I mean, if the same MDF is available with our brand name versus another brand name, then there comes a choice at the end of the day for consumer preference also. Though the consumer involvement in MDF category is very low.
Sure.
See, I think we have a strong brand, okay, and we would be also present in all the categories which the other companies are. At present, I think it's the brand play, and with time for sure we will also look at whether we can come out with a product which is something which is missing in the market. But right now the range will be the regular range which the others are also catering to.
And so my last question, so our vision was to reach 14% margins. So I believe that would obviously be delayed, but how much delay can we expect on that vision?
Look, if you really ask me, we are continuously improving on the margin front. As I said, we have been investing a lot of money on the business. We are preparing our business for the next 10 years. And if you really ask me, we are very comfortable with the way the progress is happening, within the organization in terms of various parameters. I think it is a matter of time. This year for sure, if we are able to do a 15% plus growth, I am expecting 100 basis points of improvement of margins, and then possibly next year can be much better, because good amount of investments have already happened on the operational efficiency side, and next year growth will possibly bring in some operating leverage also, which will add up to the margin. Also, when the raw material prices stabilizes, I am sure that that will also help us to improve margin further.
Thanks, sir. And just last question, can you give light on the Gabon operations? When can we expect normalization as it is experiencing issues since a while?
Well, it's something which is beyond us. So even since last 4 to 6 quarters, I have been maintaining this, that whatever we could have done, we have done. This year slightly looks more promising. And we are also slightly more bullish on the margin improvement front. Maybe we can improve the margin there by 100 to 150 basis points for sure during the year. But again, everything depends on the availability of the containers and the shipping line. If that normalizes, then for sure the year can be good. Otherwise, the year can be very much like the previous year.
Thank you, sir, and all the best.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Good evening, sir, and thanks for the opportunity.
Sorry to interrupt. Sneha, your audio is sounding very soft. We're not able to hear you.
Is it any better?
A little, much better.
Yeah. So firstly, I'll just go ahead with first question on demand. Sir, are you seeing any kind of a pullback in terms of demand with, cost going up significantly, whether it be in the wood panel space or across the space with home construction activity taking a hit? So just wanted your overall sense on the demand first.
Yeah, nowadays the demand and the traction is being measured on a weekly basis. So 1 week we see the things doing very well, and the other week we see slightly, there is a slowdown. But having said that, as I mentioned in my opening remark, that we are definitely seeing some positive traction on the home building side. And if that continues, then for sure, the demand will remain bullish. And as I've always been maintaining that, there would be a shift which is happening and which will continue to happen from the unorganized to the organized. So, of course, none of us have any data, for the overall industry. But if you see some of the major players, the type of growth what we have shown in volumes is not something by which the market overall industry would have grown. So that clearly shows that, we are gaining on market share as far as organized player is concerned. So that is another opportunity, for organized players and like us.
Right, but that should also mean that we should be easily able to, pass on the raw material cost inflation, given that, there's a shift which is happening, given that, demand also looks decent. Is the understanding correct on the domestic front, that you are able to pass on the raw material?
Well, we have been able to do it. So if you see in the last 1 year, we have almost increased our prices by maybe, 10%. Out of which 7% almost has reflected in the previous year, and as I mentioned, maybe 3%, around 3% will possibly reflect during this year out of the 10% increase what we have taken. So the pass on has been there, and for sure you would have seen that we have grown only. It's not that in any of the quarters we have not grown. So with all these things, I think the time is good. It's just that we'll have to continue to work hard.
Got that answer. So thanks. And so secondly, on the MDF front, although you said that, brand will play a role, but then, customer doesn't have much of the, decision-making factor here. Just wanted to get a sense from you, how much do you think is the proportion of demand in MDF coming in from commercial versus or retail residential, like an OEM versus, from the distributor?
Well, I think the market would be around 70-30.
Yeah.
Yeah, and our advantage would be, Sneha, that we are situated in the west of the country, so that for sure for us will be an advantage.
I would just like to add here that in MDF, outward freight will play a very important role because the product cost is very low. And in Western India, as on date, there is no manufacturer of MDF present. Neither is anybody putting a capacity in Western India. So without affecting our bottom line, we will be able to pass on the freight benefit to the consumer, which we feel by that way we'll be able to tap at least 50-60% of the Western market to start with.
Okay, so the agenda will be in the first year of operation or sooner or later, at least 50% to 60% of the Western market, we should be able to get it because of the freight cost advantage.
Yes, exactly. Because we pass that on to the customer.
Yes.
And anything on the raw material? I mean, I'm sure that you had done your basic study and everything, but whatever is going on in the current scenario with raw material prices escalating, any availability issue that you foresee after your new plant starts, or still it's on the smoother side?
I think as of now, we do not see a challenge of raw material availability in Gujarat. But yes, pan-India, the timber prices have gone up, and subsequently it's gone up in Gujarat as well. But there's no availability challenge that we will not get raw material in the future over there.
Got it. So just with the higher prices, but you should be able to get the raw material in place.
Absolutely.
That's it from my end. Thanks a lot, and all the very best to you all.
Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good evening. Thank you for the opportunity. My question was, if you look at the volumes, we have been around 56, 57 million square meters since FY19. Now, I get FY21 was impacted because of COVID. So this, at 11-12% volume growth, is it on a lower end, given the kind of real estate momentum we are talking about? Just wanted to get a color if this is a base number, realistic number, or this is a conservative estimate.
No, I won't say this is a conservative estimate. It is more realistic because somewhere we have to also see from the supply side. As I said, we were running almost our manufacturing facilities at full capacity. Now there is a new capacity which is coming. So a 10 to 11% volume growth is something which I think we can meet with the capacities what we have, and definitely we'll try for something better. But at this point of time, this seems to be the most realistic.
Understood. Sir, also wanted to check, given FY20 towards the fag end, we were impacted because of the lockdown. From a volume number, I'm just again sorry, I'm hopping on the same 56, 57 million square meter number. Is it fair to say that the industry has remained flat over the last 2 years compared to FY20, FY22? The industry was flat, or you think the kind of distribution rejig related market share loss what we had, is that the reason why the numbers look flat on a 2-year CAGR basis for FY22?
Extremely difficult to answer this question. I can only say that there is an opportunity for branded players like us for inclusive growth. So that is what we continuously try to strive for. Industry numbers, we all struggle to really get it's such a fragmented industry. It's very, very difficult to put any estimation.
Got it. Sir, any sense you can talk about in last 12 months, what is the cost inflation in each of the raw material pieces, timber and the chemicals? If you could highlight what is the increase in the pricing of these raw material over last 12 months?
See, on the timber side, we have seen a jump of almost around 20%, 25%. On the chemical side, some of the chemicals even became 2 times, 2.5 times, and then it also came down, to the previous level. And so there are a number of chemicals which we use, right? So like, I'm saying melamine, which was like at the one point of time 130 rupees, went up to 270 rupees, and then came down to around again 140, 135, 140. Of course, we don't use currently that much of melamine. When phenol prices went up significantly in the last 1 year, almost by 35 to 40%, and the formalin prices has also gone up by around 8 to 9%.
Right. Okay. And the timber price increase, is it largely in the fourth quarter, or it has been up 20-25%?
No. Throughout the year. In fact, we were assuming that at the end of quarter 4 it will start slightly coming down, which is normally the trend, but this year it has not happened.
Right. And the cost inflation will be similar, if not more, for the unorganized players, or you think Yamunanagar didn't see that kind of a cost increase in the...
No, it will be similar only, no?
Okay. Understood. And any color on the Yamunanagar, market? Like, have you seen plants shutting down, or they are reviving, or any color on that? What your team is talking about?
Well, so whatever we had gathered information, post the pandemic, the plants which had shut down, we have not heard too many of those plants opening up, and the plants which were running are jolly well running also. So it's like a status quo, in the last 6 to 9 months.
Got it. Great. I'll come back in the queue. Just one question, if I may, sir. Sorry,
Yeah, sure.
I'm asking about this. The Gabon. If I recall, 2 years back or prior to pandemic, we were talking about 300 crores, 250 to 300 crores kind of a annual run rate over 2 years. But obviously it hasn't panned out. So, in terms of the issues, you mentioned certain issues, including vessel availability. You think is there a issue with the demand as well globally, or it's more to do with the constraints what you have at your end, which is impacting the momentum?
No, as I said, there is no concern what we see as of today on the demand side. Europe, the demand is very, very good. Even Southeast Asia demands have picked up. India is always a mixed bag. And so I don't see any challenge on the demand side as of now. Only when we start fulfilling the entire orders in the month, then we'll come to know whether, the demand side challenge is there or not. Today, so we are sitting on almost a 2.5 to 3 months of order backlog at any point of time. And also to tell you on this number, what you said, 250, 300 crores. So I think we have reported around 185 crores sales for this year. 183. And there is also a domestic sales which happens from the Gabon. We use the same phase in India also for our own consumption, which is around another 40, 45 odd crores. So if you see from the Gabon perspective, their sales has been around 230 odd crores. It's just that, that gets knocked off when we do the consolidation to the extent of whatever we have used for our domestic manufacturing. So reaching to that number of, 300, as I said, if some of the challenges are taken care of, which is beyond our, control, hitting those numbers is not such a big deal in the next 6 quarters.
Sorry, you are saying we can touch that number in 6 quarters once things normalize. Is that?
Yeah, because see, we are technically already doing around 230 odd crores of business from there. So what you are talking is 250 to 300. I am even looking at 300 as a number, which is like, another 20%, 25% from here on. That seems possible. And we have the means to deliver those numbers. It's just that, this shipping line challenges has to go away. And maybe some amount of, luck in terms of availability of raw materials. We faced some challenges in the previous year at times in terms of getting the raw material on time, and even the quality of raw material at times, because of which also margin took some beating.
Any particular reason of raw material issues, sir? Sorry, just clarifying on that.
No particular issue. It's just that sometimes the extended, rainfalls and other type of challenges, which is very, normal to our type of business, create some issues.
Got it. Thank you so much for the clarifications. I'll come back in the queue for further questions, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening, and thank you for taking my question. I just wanted...
Maybe request that you speak a bit louder. Your voice is not audible.
Hi, is it better?
Yeah.
Yeah, thank you. Hi, good evening. Thank you for taking my question. I just wanted to ask about the new capacity that's coming in Lucknow. So as per the presentation, it shows a revenue potential of 250 crores. So assuming it won't run at full capacity in the first year and we might start for 3 quarters, can you give any color on how much revenue we can come from new capacity this year?
Well, this year, since it will be like a 9-month operations, we are, for the full 9 months, we are expecting to do somewhere around 120-125 odd crores of turnover. And next year, possibly, we would be able to hit anything between 220 to 240 for sure.
Okay, that helps a lot. So also just one more clarification. The 10% growth in volume, does that count for the Lucknow capacity increase, or that's just from existing capacities?
No, it takes care. It also accounts for the Lucknow capacity.
So, sir, then that would be a very flattish growth in terms of volume, because 120 crores could easily come around.
But see, those are all premium products. So in terms of volumes, it will be lower. When you look at that, the price composition is higher for the same.
Sorry to clarify, in the Lucknow, price composition is higher, right, sir?
Yes, because that is mainly our flagship brand.
Okay. And if I may just squeeze in one more question, sir. What is the difference between in margin in our own manufacturing and outside manufacturing?
If you take all the costs into account, the difference would be only around 3 to 4%.
Gross profit.
Yes.
Yeah. Okay. Thank you so much for my questions. All the best, sir.
Thank you.
Thank you. The next question is from the line of Venkat Samala from Tata Asset Management. Please go ahead.
Hi, thanks for the opportunity again. Am I audible?
Yes, very much.
Yeah. Thanks a lot, sir. So, sir, just a clarification. Since you mentioned that you were able to largely pass on the price escalation that you've seen on the RM side. So whatever lower margins that we are expecting in FY23 versus our guidance, would that be largely on account of investments that we've been making?
Lower margins?
Yes.
No, we are not expecting lower margins.
No, I mean, versus the 13 to 14% guidance that we've previously given, right? And you said that, whatever price increases that have happened, we have largely passed it on. So that difference that we've seen is largely on account of investments. Would that be a right assumption?
Sorry, your voice was not very clear. You might have to repeat it again.
Yeah. Is it better now?
Yes.
Yeah. Sir, what I wanted to understand was, now that you said that most of the price escalation that you've seen on the RM side, you were able to largely pass it on through price hikes. So the 100 pips increase that we are seeing in margins YOY in FY23 over FY22, that is still meaningfully lower than what we had originally guided for, right? So that differential between what we had guided for and what we're going to be achieving in FY23, would that be largely on account of investments that we'll be doing for the longer term? Would that be a right assessment?
See, I'll tell you first thing, when we had mentioned about 4%, it was, and I think someone had asked me also at that time, it was more out of a gut feel, looking at the as is, where is, ways, the way we were working. Okay, it was not very scientifically calculated. But as things have been unfolding, and as we have been investing into the business, it is finally adding up to my margins also for future. So, 14% when we said, yes, I still stand by it. It very much looks possible over a period of time. But, to add 1 plus 1 and make it 11 is something which I may not be able to, answer that way. But yes, we will be on an improving trajectory, and if this year we are able to improve 100 basis points, next year again, as I said, we'll get economies of scale also. And maybe, who knows, next year we are at around 13.5% type margin.
Understood. Right. So, longer term, that trajectory is still intact, right? Timing is...
there is no going back on that. I think 14% is doable. and the way we are working on many aspects of the business, the way we are becoming efficient day by day, that is very much doable. It's just a matter of time.
Okay. Perfect. And with respect to...
sorry to interrupt, Mr. Samala. May we request that you return to the question queue so the participants waiting for their turn?
Okay, sure. Thanks.
Thank you. The next question is on the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Am I audible?
Yes.
Yeah, good evening sir. My question pertains to first on the growth guidance which you gave. As I see for the full year, standalone top line is close to 1400 crore and you are guiding 140 crore contribution from the new unit, plywood, implying flattish growth, flattish number from the existing operations. Is this understanding correct? And
from the new plant, I am guiding around 120 odd crores. But see, we will just start the trial production. Sometimes you can even go wrong for a month or something, right? So this I am giving you the best estimation for this year of 120 odd crores. It can still be 100 also.
Okay, so the rest 20 to 40 crore incremental is what you're looking at growth from the existing line.
Yes.
And second, if I compare your gross margins with your immediate peer, the market leader, both of you are, and I see that despite they delivering 30% gross margin, their EBITDA margin is higher versus yours. So what, while yours gross margin is 37-38%, your EBITDA margin comes down to 10.5-11%, vis-a-vis Century Ply is close to 14%. So would you have any color on why the differential exists at EBITDA level?
See, I think when you are comparing the two companies, I have not seen all their numbers for sure. But after the gross margin, possibly we have today one line of business only, right? So all our costs get allocated to this one line of business. And so definitely I think they will have an advantage and edge over, in terms of allocating their costs, including their marketing overheads and everything. So that might be one of the factors. The second factor, to some extent, we have different business models. Our target customers and theirs, there will always be a difference also in the business profile. So that also may play a factor. I'm not very sure. So I think these will be the only two reasons.
No issues, sir. And second, on the MDF, this financial year end, you're targeting commercial operations. So first year of FY24, what sort of revenue you're looking at from the new unit?
350 to 400 crores.
Okay. And by second year, you would be operating at full utilization?
Well, we think that we will be able to reach around, not full, but yes, maybe, 80-85%. So that can be around 650 odd crores.
Okay. And margin profile, what sort of margins you're looking at, sir, in that business?
Look, we had done, all our projections, everything basis the margin of 20%. Today, the business is running at a very different margin level. I understand it may be anywhere between, 28 to 30%. But as I also understand from my technical team that, it takes some time to stabilize production and to improve on efficiencies and improve on margins. So we will take some time to, reach the level of margin which the others are making.
Okay.
Because they have been already into this business and, they would have stabilized their plant for last 3, 4, 5 years. It's a continuous journey, but that can be a difference of maybe, 3% to 4% max.
Okay.
So if the other mature players are operating at 30% 2 years down the line, I think we will be able to reach around 25-26% for sure.
Okay. And last question again on the MDF.
Mr. Ravi, sir, we have participants in the question.
No issues. I'll come back to you.
Thank you. The next question is from the line of Chirag Lodaya from ValueQuest. Please go ahead.
Yeah, thank you for the opportunity. So my first question was on what would be the peak debt and cost of debt for us this year?
I think our net debt will be somewhere around 600 to 625. 625. Yes, 625, around 625 odd crores. And the cost of the debt, this is mainly all term loan today, if you really see. So the India debt cost would be in the range of around 6.25 to 6.5 today. Depending on, if the interest rate goes up, this will also move up.
So if you can give us gross debt number, that would be helpful.
Gross will be or 700. Gross can be around 700, I think.
Okay. And so this 350, 400
sorry
crore.
to interrupt, Mr. Lodia. Sir, may we request that you return to the question queue? There are participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Ishrat Khatri from Omkara Capital. Please go ahead.
Yeah, hi, sir. So I wanted to know, so we were trying to figure out why why there's no capacity for MDF in the west of India. And we heard that the wood cost per ton is significantly higher. So if in the south it's about 3,000 rupees, in the west it's about 4,000 to 4,500 rupees. So is that true first? And if yes, will we have a higher cost of manufacturing?
We have not come across any such, scenarios.
No, I don't think so. We've come across any such scenario. And also there is no facility in the west because there was not much plantation available in the west. And with our study and the report we've done and all the research we've done before setting up this facility and before going ahead with this investment, our study clearly shows that we'll have enough raw material for one plant to sustain. And west clearly is a very good market.
Okay, great. That's also. Yeah.
Slightly higher. All the chemicals are always either manufactured in the west or imported in the west because of being close to the port. So we'll definitely have certain advantage in the inward freight and in the cost of procuring raw materials compared to other manufacturers. So even if our wood cost is slightly higher, I mean, we can compensate a little bit there.
Oh, okay. Great, sir. Good to hear. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. The next question is in the line of Arun Baid from ICICI Securities. Please go ahead.
Just one clarification. You said Gabon has issues. So in future, we should not expect any investment from us in Gabon, right?
So we have not been doing any investments per se. Okay,
Yeah.
and this scenario of this challenge, what has actually got built up is only after the pandemic.
True.
So but things have been easing out, and that's why I'm slightly bullish. But I'm not putting all the cards on the table at this point of time. This shipping line issue, if it gets resolved, will definitely give you good numbers for the year.
No, sir. I'm just clarifying that in future we plan no more capex in Gabon, right?
As of now, we have no plans in hand.
Okay. And so just one clarification more was.
Oh, sorry to interrupt, Mr. Baid. May we request that you return to the question queue? There are participants waiting for their turn. Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah. Good evening, sir. Thank you for the opportunity. So just one thing I wanted to know, out of your total volume, sales volume, what percentage of it?
Agarwal, sir, your audio is not clear. Can you use the handset mode while speaking?
Hello?
Yes, sir.
Hello? Yeah, am I audible now?
A little bit.
Much better.
Yeah. Yeah. So, sorry, sir. So I just wanted to know, like, out of our total volume sales during the year, what percentage of it belong to the premium category of plywood, and what percentage of it belong to the mid segment and the cheap segment plywood?
See, if you see our own production, which is almost, I think, 50% today, so it's like 50-50 actually.
Okay. Okay, and could you give me the realizations, the difference between the realizations for the premium and the cheap segment?
Realization?
The difference between the realizations between the premium segment plywood that you sold and the other category of plywood, the mid segment and the cheap segment plywood.
Well, what we manufacture in-house is mostly the realization would be upward of 85 to 90 rupees at the net level, and the mid-level and the lower level is anything between 55 rupees to 90 rupees type.
Okay, that's it from me. Thank you very much.
Okay.
Thank you. The next question is from the line of Asim Bharde from DAM Capital Advisors. Please go ahead.
Hey, hi, good evening, team. Just wanted a couple of clarifications. Firstly, on the 10 to 11% volume growth expectation, does that also include the outsourcing component? And if not, how much that would be? And secondly, on the Gabon revenue expectations of 250 to 300 crores 6 quarters from now, that does not include Greenply India. These are the two clarifications I want.
No, it includes. That's why I mentioned that number of 230. That is the type of capacity which is getting used there, and 300 is with reference to 230. Well, look, as I said, 6 quarters or 4 quarters, if the problem gets resolved, even this year can be much better. Okay. We have everything. We have a team in place. Our productivity numbers are good. Order book is there. We have been actually declining because in between there was so much of challenge, and we cannot keep adding to our inventory, means produce and keep adding to inventory. So we have to decline orders also. So only when the situation normalizes and we have a time period when we are able to serve the order in that particular month only, then we will really come to know also on the demand side of the challenge. Right now, though, it looks very rosy.
Sure. And on the outsourcing bit, if you can just talk about
Sorry to interrupt, Mr. Bharde. May we request that you return to the question queue?
Let me just answer that portion is also included.
So overall, we're looking at a 15% value growth, in which 10 to 11% is the volume growth.
Yes.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, thank you for the opportunity. Am I audible?
Yes.
Yes, sir, what will be the ESOP cost for next 2 years?
This year it is 15, 12, and next year?
Next year, 23 will be
15, and next year? 3.
FY22 is 12.1. FY24
3, I think I said I saw it somewhere. Yeah. So it's 15 for this year and 3 for next year.
3 crores for 24.
Yeah.
Got it.
Which is the grants which has already been issued.
Right. And the growth rate for premium category, mid category.
Sir, may we request that you return to the question queue?
Sure.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, hi team. So just one clarification, the volume growth that we are talking about of 10 to 11%, it's similar to the trajectory that we saw in Q4 of this year. And with the stance that you are taking that, with the industry tailwinds and also the formalization of industry, is it more conservative or how should we look at it?
Well, quarter 4 is always a better quarter, if you will see from panel business. Okay, despite that, we have grown by around 8% in this quarter 4. So we have grown by around 8% in quarter 4. So taking a full year growth of 10 to 11%, I think is realistic.
Understood, sir. So, sir, just one clarification on the same point. The shift from.
Sir, may we request that you return to the question queue? Participants are waiting for their turn. Thank you. The next question is from the line of Priyam Khimawat from ASK Investment Managers Limited. Please go ahead.
So one quick question from my end. If I understand correctly, we were alluding to a 600 to 650 crores revenue in MDF on a 240,000 capacity. But right now, you highlighted that in FY25, at 85% capacity, we'll be doing a similar kind of revenue. So I think earlier our estimate was of 27,000 per CBM like kind of revenue. So is that assumption now changed and we are assuming a higher per CBM revenue?
Yeah, because see, if the market remains similar, the per CBM realization will be higher. And then this is the same, assuming that the prices remain what it is today.
No, but we're talking about 7-8 quarters down the line in FY25 with more capacities coming in. Do you think this kind of pricing will sustain?
Well, if you ask me, I sincerely feel that there would be some level of corrections which will happen, but we all have to wait and see it.
Okay, and any kind of export which we've been looking for?
Sir, may we request that you return to the question, please?
Okay.
I'll still answer that question. We will be having no export liability as such, but yes, we might export 10 to 15% of our total capacity, just to kind of ensure ourselves that in bad times or when there is overcapacity in India, we have another alternate market where we can always dump a little bit of our production. But if you look at the margins today in export versus domestic, obviously it makes more sense to sell 100% of our capacity in domestic.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, just a clarification, sir. You mentioned 400 to 450 crore revenue, 350 to 400 crore revenue in the first year of operation, that is FY24. Just thought of clarifying, have I got the number right? Because that assumes that in the first year itself will be touching about 65-70% utilization. That means not much of teething issues like what you were kind of...
So one, we are getting full year. We are assuming that, we'll start our trial production and maybe to some extent some very, basic level of commercial production also in Q4, which means we get a full visibility for the next 12 months. And as is given to understand and as, the past experience of some of the other lines, how they've improved on the efficiencies, we think in 6 months time the efficiencies can reach to anything around 60% to 70%. So it all depends, but I think that's a doable number for the full year.
Achal, just to add, the current pricing actually indicates a 100% capacity.
Sorry to interrupt, sir. We're not able to hear you.
So what Nitin is saying that on the current pricing, the same revenue would be around 7.5.
And if you, then we are talking about a 50% utilization, not 65.
Sorry, I'm a bit lost actually. You're saying 50% utilization for the full year.
See, one minute. See, on the current pricing, okay, the same earlier 600 crore of 650 crore of estimation what we were giving will realistically be around 720 to 750 crores. So when we are talking of 350 to 400, we would be only doing around 50% capacity and not 65.
Okay. That 700, 720 is for the full year, at full utilization.
Yes. Okay. Because see, the prices have moved, no?
Correct. Understood. Thank you so much for the clarification.
Okay.
Thank you. The next question is on the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Sir, only one question on what is the capex amount due for this financial year then? Everything will be incurred for the MDF this year, and how much is pending?
Yes. We have around 420 odd crores, 425 odd crores to be spent during this year on MDF.
Okay, and this plywood, everything is done in terms of capex in FY22?
No, plywood, some 30 crore of capitalization will happen in the first quarter.
Okay, so total would be 450 odd crore, you're saying?
Yes, and another, let's say 20 to 25 crore of my maintenance capex for my existing facilities. So in total, it can be around 475 odd crores.
And for next year, any major capex you're looking at currently?
No, as of now, no such major plans.
No, in terms you would have some reckoning that this much capex we need to keep on adding new capacities and all? This is the only question.
Well, again, at this point of time, we have also announced one, this associate partner facility, how we call it, is in Hapur. So that will give us some, additional turnover or capacity for next year. And we might look at one or two more such partnership, which may not envisage major capex from our side other than our maintenance capex.
Okay. Great, sir.
Maybe,
thank you.
Maybe something which goes into, MDF once the line becomes operational. I am not very sure at this point of time. But maybe, if something further goes up into the MDF line next year.
And no thoughts on particle board business, anything like that, as many players are thinking about?
No, we are already doing a large investment work, so, let us settle down. Okay, so, and I think the only good thing which we can mention at this point of time that our project is running on time. Our implementing partners were extremely happy with the type of progress what they have seen. Fingers crossed, I think we will be able to, come out with our first commercial board in Q4 of this FY.
Great, sir. All the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Sanidhya Mittal for his closing comments.
Thank you for taking the time to participate in this call. In case of any further clarification or queries, please feel free to reach out to Mr. Gautam Jain. Thanks again and goodbye.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital PCG Desk, that concludes this conference call. We thank you for joining us, and you may now disconnect your line.